Good morning and welcome back to Dark Gamma Pre-Market Analysis, everyone. It is April 16th, 2026, and we are coming in with a mildly bullish open. The SP 500 is sitting at 7,035.6, up about 12.65 points from yesterday's close of 7,022.95. Now here is the key backdrop. Max Pain is all the way down at 6,830. Which tells us there is a significant gravitational pull well below where price is currently trading. The options market will be watching that gap very closely as we move through the session.
That is exactly right, Samantha. That gap between current price and max pain is substantial, over 200 points of separation. So do not let this quiet open fool you. The expected move for today puts our range between 6,989.1 on the downside and 7,056.8 on the upside. We are currently pressing right up against the upper boundary of that range in the pre-market, which means buyers are going to face real resistance if they try to push beyond 7,056.
And that upper boundary is critical. If we break and hold above 7,056.8, that would be a genuine show of strength and could invite momentum buyers in. But if we stall there and start to fade, the path back toward the lower end of the range at 6,989 becomes very real. Given the distance to max pain, the gamma exposure profile is likely working against sustained upside here. Dealers would need to hedge more aggressively on a rally, which can actually slow the move.
Now on the sector side, technology is clearly leading this morning, up 0.69%, and we can see why when you look at the Magnificent Seven. Microsoft is the standout, up 1.71%, followed by Tesla up 0.98 and Nvidia up 0.67. Those three names alone are doing heavy lifting for the index right now. Meta and Alphabet are contributing modestly, and Amazon is essentially flat at 0.08% up.
But the drag to watch is Apple, down 2.19% in the pre-market. For a stock with that kind of index weight, that is not a small move. It is a meaningful headwind that is keeping this gap from being significantly larger. On the other side of the ledger, materials is the weakest sector, off 0.64%, which suggests the risk appetite this morning is selective, not broad-based.
So putting it all together for the Dark Gamma community, the scenario today is a cautiously bullish open with a ceiling very close by. Watch 7,056.8 as your upside trigger and 6,989.1 as your downside warning level. The macro story from Max Pain tells us the options market is not aligned with current spot price, so be ready for potential mean reversion pressure if conviction from buyers does not show up in the first hour.
Well said, Billy. Stay disciplined, know your levels, and let the market come to you. That is your Dark Gamma pre-market setup for April 16th. We will be back with updates as the session develops. Stay sharp out there. On today's macro calendar, the main event is Philadelphia Fed Manufacturing Survey at 8:30 a.m., consensus 12.4, previous 18.1. Additionally, 2 Fed speakers are scheduled today.
There are 3 more events during the session. These releases could drive volatility at the S&P 500 open.
The Magnificent Seven are broadly in the green this pre-market session, with 6 of the 7 names trading higher and setting a constructive tone heading into the open. Microsoft is leading the charge, up 1.71%, while Apple stands out as the sole laggard, dropping 2.19%.
Microsoft's move is notable given its magnitude relative to the rest of the group, and Tesla is holding second place with a gain of 0.98%, suggesting some risk appetite returning to the higher beta names. Nvidia adds 0.67%, which keeps the artificial intelligence trade alive but at a more measured pace than we've seen on stronger sessions.
On the laggard side, Apple's decline of 2.19% is worth watching closely, as it carries enough index weight to cap gains in the broader tech sector, even with the rest of the group pushing higher. Amazon is essentially flat, up just 0.08%, so the enthusiasm is clearly concentrated in the top 3 or 4 names rather than spread evenly across the group.
Overall, the tone for tech is cautiously optimistic, with Microsoft and Tesla doing the heavy lifting. But Apple's weakness introduces a drag that traders will need to weigh carefully against the otherwise positive pre-market setup. Today's broader news flow doesn't offer a direct catalyst for any of these 7 names, so price action here is likely being driven by positioning and overnight sentiment rather than fresh fundamental headlines. Before we continue with today's analysis, we have a quick message for you.
Don't go anywhere.
Want to see exactly what institutions are doing in the market in real time? Then this is for you. Exclusively for members of the Dark Gamma community, the SPX trading platform is currently in beta, and access is completely free until the official launch. Go to the link on screen, sign up, and in the discount field, enter the code shown on screen to also activate 1 free month on the institutional levels bot tool. From the platform, you will see the complete market X-ray, institutions trading live, liquidity zones, points of interest, unusual positioning, everything that moves the price of SPX visible on your screen in real time. No prior experience needed. Just get in, explore, and start seeing the market the way institutions see it, like you never have before. Take advantage of this access before it closes.
There's your invitation. I forgot to mention that both Billy and I are there with you in real time with our AI analysis of unusual positioning and other key metrics.
That's right. See you there. Now let's get into today's earnings.
4 major earnings hitting the tape today, starting with Taiwan Semiconductor in the pre-market. At $890 billion in market cap, it towers over the session, carrying a beta of 1.82 and a 5.1% expected move baked in by options markets. That elevated beta means any macro or tariff headline could amplify the stock's reaction well beyond that implied range.
Right, and the technology sector is already under pressure from trade uncertainty, so a miss or cautious guidance from Taiwan Semiconductor could ripple hard into semis broadly. PepsiCo and Abbott round out the pre-market names, both defensive in nature with betas near 0 and modest expected moves in the 4 to 5% range.
Flipping to after hours tonight, Netflix dominates with a $454 billion cap, a beta of 0.52 and a 7.7% expected move, the widest implied swing of the entire day across both sessions. Alcoa and FNB also report, but are materially smaller stories in terms of market impact.
Looking ahead to tomorrow's pre-market, Truist Financial leads the 3 regional bank reporters with the largest cap at $61.9 billion and a 3.5% expected move, with Fifth Third and State Street close behind. Watch whether today's FNB result sets any tone for that regional bank cluster. The 0 days to expiration crowd will be active around all 3 given the clustered open interest sitting right at key strikes in the financial space.
Geopolitical tension in the Gulf is going to be the dominant theme at the open, with South Korea positioning itself amid the Iran situation, likely pushing energy names higher and adding a risk-off undertone to the broader tape.
Agreed, and that risk-off sentiment could weigh on the SP 500 futures, especially with gamma exposure already negative heading into the session, meaning dealers will be amplifying moves rather than dampening them.
On the corporate side, Arthur J. Gallagher scooping up Bridge Insurance Brokers signals continued consolidation appetite in the insurance brokerage space, which could lift the broader financial sector at the open.
The Aplantex Biotech Research Partnership is more of a slow burn story, unlikely to move the needle at open. But with 0 days to expiration options active in biotech names today, any headline momentum could spike open interest in that space quickly.
3 companies are hitting the public markets today, so let me walk you through what that actually means and who is stepping into the spotlight.
An IPO, or initial public offering, is when a private company sells shares to the public for the first time, allowing everyday investors to buy ownership in the business.
Leading the charge is Arxis Inc., trading as ARXS on the Nasdaq Global Select Market, offering nearly 37.7 million shares priced between $25 and $28, alongside Madison Air Solutions Corp. Coming to the NYSE as mayor with over 82.6 million shares in the $25 to $27 range.
Rounding out today's slate is Mercator Acquisition Corp., listing as MRCOU on the Nasdaq Global Market with 25 million shares priced at a flat $10, which is the typical structure you see with a blank check acquisition vehicle.
The positioning picture for S&P 500. Max Pain sits at 6,830.
On the call side, the strike nearest to price is the 8,000 strike with 30,336 contracts of open interest up plus 119.2%. That's the immediate ceiling to watch.
On the put side, the 6,180 strike with 17,725 contracts of open interest, up plus 208.3%. That's the closest structural support below.
The open interest buildup at nearby strikes confirms active positioning around both sides. The market is clearly focused on those zones.
With S&P 500 near 7,035 and Max Pain at 6,830, there's gravitational pull toward that level into expiration. Diving straight into the SP 500 0 days to expiration picture, the gamma flip at 6,856.4 is the critical line where dealer hedging behavior switches from stabilizing to amplifying price moves.
Right. And with spot currently sitting at 7,035.6, well above that gamma flip, dealers are in positive gamma territory, meaning they sell into strength and buy weakness, acting as a natural shock absorber for intraday moves.
The call wall at 7,060 is where the heaviest call open interest clusters, and dealers hedging those positions will sell the underlying aggressively as price pushes higher, effectively capping upside momentum right around that level.
On the downside, the put wall at 6,840 provides a natural floor, as dealer hedging of those puts means buying pressure increases on any dip toward that level. So the trading range for today looks pinned roughly between 6,840 and 7,060.
Let's look at the levels where institutional players have concentrated the most liquidity. In the annual analysis, the dominant level is the 6,943 level, below current price, with maximum liquidity concentration over 24 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,026 level, below current price, with maximum liquidity concentration over 1 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,036, above the gamma flip at 6,856.
1 sigma range, 68% probability, goes from 6,989 to 7,057. 2 sigma 95% extends from 6,955 to 7,091.
On the GX side, call wall sits at 7,060, structural resistance. Put wall at 6,000. 840 is where dealers become forced buyers.
The top institutional whale levels nearby are 6,973 and 6,966. These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking from the dark gamma institutional scanner this session, 29 new large entries have been flagged today, with the heaviest single flow going into Netflix calls at the 120 strike expiring July 17, 2026, commanding a premium of $51.86 million and printing over 157,000 new contracts in open interest. Meta follows with $41.33 million in premium on its 675 calls expiring June 18th, and Nvidia adds $37.59 million at the 200 call strike into late May. The fourth notable entry is Carvana at the 350 call, with $26.3 million in premium flowing through.
What stands out across all 4 new entries, Samantha, is that every single one is positioned in calls, and the ask side execution percentages are notably elevated. Nvidia printed at 96.6% of ask, Meta at 87.6%, Netflix at 83.8%. That tells you these orders were executed aggressively. Sectorally, we are looking at a concentration in mega-cap technology and streaming on one side, and a single consumer discretionary name in Carvana on the other. No defensive sectors, no energy, no financials in today's new detections.
And on the confirmation side, Billy, 5 previously flagged contracts have now seen open interest grow by at least 20%, reinforcing the original signal. Arista Networks at the 170 call expiring May 15th, NVIDIA again at the 200 call for May 15th, and WWF at the 21 call for June 18th are all confirmed on the call side. The one outlier in the confirmed book is Amcor Technology, where a put at the 60 strike expiring June 18th saw $5.15 million in premium with nearly 6,000 new contracts added. That is the only meaningful put positioning confirmed across both lists today.
So to summarize the full picture from today's scanner, call positioning is overwhelmingly dominant, representing all 4 new institutional entries and 3 of the 4 confirmed contracts. The technology sector concentrates the majority of premium flow with Netflix, Meta, NVIDIA, and Arista all present. NVIDIA in particular appears across 2 separate expirations and 2 separate detection events, which makes it the most repeated name in today's institutional tape. The lone put confirmation in Amcor adds a note of caution to the semiconductor supply chain space, and that is worth monitoring as this session continues.
Breaking market flow data here on Dark Gamma. Our institutional scanner has flagged a new contract entry today on Netflix, ticker NFLX. The detected position is a call option with a strike of $120, set to expire on July 17, 2026. Total premium registered on this flow comes in at $51.9 million, marking this as a significant institutional size event worth tracking closely.
That is a substantial flow, Samantha. Looking at the volume and entry data, the scanner registered 162,597 contracts at the time of detection. The institutional average entry price on the premium was $3.19 per contract. Open interest currently sits at 163,198 contracts, with 157,732 of those being newly established positions, indicating this is largely fresh activity rather than existing positioning.
Now an important note on how to read this setup, Billy. The current contract price is $3.75 compared to the institutional entry price of $3.19. That means the contract has already appreciated 56 cents since the time of detection. In what analysts describe as an ideal scanner setup, the current contract price would be near or below the institutional entry price, and open interest would be flat or growing. In this case, the contract is trading above that entry level, which means the setup has already moved since the original detection point.
And rounding out the data picture, the underlying break-even price at expiration for this contract is $123.20 on Netflix shares. That represents the price level at which the contract would reach parity at expiration based on the strike and the registered premium. We will continue monitoring this flow as part of our ongoing institutional tracker coverage here on Dark Gamma. No recommendations are expressed or implied in this report.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.